mutual fund schemes, the sectoral funds as well as thematic funds. And my guest today is Amit Kukreja, the founder of Amit Kukreja Advisory. Thank you so much, Amit, for taking the time. Always a pleasure speaking with you. Let's start with the definition of the two. What are sectoral funds? What are thematic funds? How do they differ from each other?
Sure. So, Alex, sectoral funds are those funds where the fund manager is investing money in a specific sector of companies. So these companies, they belong to the same sector, and the money being invested is actually being invested in the sector. And the call could be taken because this sector could be going through a cyclical growth, and investors might be trying to take an advantage of the cyclical growth. Thematic fund can be a fund which follows a theme. For example, infrastructure. Infrastructure is a theme, not a sector. A fund manager could have chosen a theme of infrastructure looking at the growth potential of the country. The fund manager could have chosen companies which will be driving the physical infrastructure. It could be choosing a company which would be driving the banking and financial services infrastructure or a telecom infrastructure. So the theme could be spanning across multiple sectors. So thematic fund is a fund which could be covering multiple sectors. Sectoral fund is a fund that covers only a specific sector.
Let's talk about these individually first, and then we can get into a conversation about where both of them fit in a portfolio. Let's start with sectors. Sectors are relatively easy to understand. So if you were to talk about a pharma or a healthcare fund, or rather, in this example, a bank-oriented fund. How do you decide which ones work for you? Because I think a lot of advisors talk about banking as a sector that is very core to the growth of this country. If you look at the constitution of the benchmark index itself, you'll see quite a large orientation towards financial companies. So how does one decide, what does one have to bear in mind when it comes to sectoral funds?
Yeah. So one has to be really familiar with how the economy of the country is shaping up, how the industries are playing a role, the sectors are playing a role in shaping up of the country's economy. So you have to be well versed with what's happening in the financial services space. Normally, a sector goes through a phase of stabilization. So a sector in a very early stage might show you explosive growth, but it might also show you high volatility. A sector which is in a very steady and stable phase, for example, banking and financial services, which is the backbone of any economic growth, is in a stable phase, and you will see the sectors are doing steadily, performing consistently, and giving a decent double-digit return on an annualized basis for a holding period of 5 years or more. So basically, what a sector investment requires you to be, it requires you to be a financially savvy guy who's tuned into the economic development of the country, a well-read person who is knowing and understanding how IT has shaped up, how IT was giving phenomenal returns in the infancy and how it has become a steady revenue earner for the country, how banking space has shaped up, how energy space is changing because energy space is now going to focus more on the renewable side. And this renewable side could also become a theme because your renewables can also be including the companies which are manufacturing the EV battery. So you need to be on top of the entire economic development story. And if you cannot, don't lose heart. You have experts who can give these analysis, and you can subscribe to that analysis and accordingly take a call in investing in these funds.
Okay, I want to also take the opportunity of asking you what you think about some of these sectors. Because, and this is perhaps going to help people along the way in terms of the decisions that they want to make. We'll get into allocation later, but you mentioned banking, the backbone of an economy. Infrastructure at one point of time was seen in very positive light. Of course, now perhaps it's a different view that is being seen, right? Because some of these companies had a significant amount of leverage. So what would you say in terms of the sectors that are at the forefront, the sectors that could potentially come into focus in the near to medium term?
Sure. The sectors which are at the forefront, I would say banking and financial services, information technology, and pharma. These are pretty stable sectors. And if you look at the impact COVID created in our lives, we all are more attuned now to healthcare products. We could all be requiring more and more medical products or medical equipments, given the lifestyle that we have taken to. So pharma is a very steady leading sector, and I see a good progress and growth in the foreseeable future in pharma sector. Banking is the backbone of the economy, always going to do well, consistent performance. The fintech world is changing, the world of banking is changing, the world of traditional insurance sector is changing. So you will see a lot more of these changes going in effect in keeping the sector stable. IT is stable, pharma is stable. The sector where I see a lot of interesting development happening is the energy space, especially the renewable sector. If we can have a separate sector that focuses on renewable energy, it could do wonders in the coming 5 to 10 years. If you focus on the digital India theme, a couple of fund houses have a fund which is related to the whole technological development of the economy, the Digital India Fund. That is likely to do well because the whole fintech space is going to revolutionize the investments and the experience of the customer and the delivery and fulfillment of the products. So tech space with a very niche or very strong focus on how it is going to impact the economy, the renewable space. And I would also say the semiconductor space, we don't have that sector at the moment, but the semiconductor space is doing really well outside India. We know that these chips are needed in everything that you're using, be it your mobile phone, be it your watch, be it your glasses, be it your earphones. These chips are an essential part of your day-to-day living. So semiconductor space is expected to do really, really well in the coming time.
Yeah, and we'll have to see whether the government's attempts at drawing manufacturers of semiconductors bears fruit. We'll have to see how that pans out. But let's talk about themes, because I think this allows you to play, like you were just talking about, certain themes, the renewable energy theme, for example, the move to electric mobility. It gives you a wider canvas to play. But could you also give us a few examples so that we can understand how these themes are working?
Sure. So one of the examples I want to highlight is ESG, right? The environmental, social, and governance thematic funds. What are they focused on? They are focused on ensuring that the businesses are compliant with the environmental norms, the social norms, and the governance norms. So they're also focused on making sure that the set of companies which are ESG compliant are not getting impacted adversely because of the ESG non-compliance issues, which means a lot more companies, they could be belonging to different sectors, are ESG compliant and are basically de-risked by ensuring these compliance norms are in place, which means an investor can look forward to steady return in this particular theme. The other theme is this whole consumption theme, right? I'm looking at my notes. Give me a second. The whole consumption theme, how we are consuming products, how we are consuming lifestyle products or day-to-day consumption items. This whole consumption theme is also shaping up. And this consumption theme is going to dictate based on people's choices and preferences, how they want to live their life, how these companies should be selected and added to the particular fund which has this theme. And this is also expected to do really well in the coming times. The more and more fitness conscious we are becoming, the more and more health conscious we are becoming, the more and more emotional well-being driven and mental well-being driven we become. We see these lifestyle products and services are going to do well, and they may fall sometimes in the digital theme, they may fall in the consumption theme also. And ESG is another good example that I just spoke about. So these are some of the themes. Infrastructure is a theme as well, but it hasn't done well since it started. But the other themes I'm bullish are likely to do well in the coming time.
Talk about allocation, and hopefully after that I'll also get a sense from you in terms of some of your picks. I'm not saying that an investor should take these as recommendations. Some of the thematic funds out there, some of the sectoral funds out there that you see, maybe your top 3 or top 4, whatever you can come up with. But give us a sense of how the allocation should be in someone's portfolio. And I'm not saying this is a one-size-fits-all. This is, in a sense, a bet that you're taking on a particular sector, on a particular theme. So it could be hit or miss. How much should you allocate of your portfolio?
Sure. So, Alex, my view on this is get into investing in sectoral funds and thematic funds only if your core portfolio and the satellite portfolio has already been filled with the top performing multi-cap, flexi-cap, large cap index funds. As we all know, the equity portfolio is always a layered portfolio. You need to fill your core first. Core could be index, core could be actively managed large cap funds. Then you need to fill your satellite, which could be a multi-cap or a flexi-cap or a mid-cap or even a large and mid-cap fund. Once you have made sure that the core financial goals are addressed with the core equity portfolio and you have a risk appetite, because these funds are cyclical in nature, the sectoral and thematic funds can have a really double-digit cut or in a double-digit growth based on the business cycles. They all go through business cycles. You take an exposure of 5 to 10% once you have ensured the 100% of your financial goals portfolio is addressed by the core and satellite portfolio of diversified equity mutual funds. This is more for high risk takers and also for people who are more well-read and financially savvy. So 5 to 10% of allocation is good enough in any portfolio with a person who is a well-read person and wants to take a risk in these cycles of business.
It's also advisable to understand the factors that could change the trends for that particular sector, because, for example, if the rupee depreciates, then it's seen as positive for IT software outsourcers. If there is a change in the interest rate cycle, it could affect how banking works. In a sense, you have to time how these work, right? So you have to enter the opportune time, right?
Absolutely. You have to stay on top of the macroeconomic factors. You need to stay on top of the interest rate cycles. You need to stay on top of the whole global events like COVID. COVID triggered a big surge in the valuation of the tech companies and the valuation of the pharma and the healthcare companies. So if you understand these economic cycles and the macroeconomic events which are impacting the flow of the money into these specific businesses, then you know when to get in and when to get out.
End with a quick look at the funds that you've looked at and you've looked at favorably. If you can give us a sense of both sectoral as well as thematic.
So I'm going to highlight 3 or 4 names. It doesn't mean that I'm recommending these funds. I'm just highlighting these names based on the performance of last 5 year and 3 year. These are sectoral and thematic funds. Aditya Birla Sun Life, MNC, it's a multinational company theme. They seem to have done well, close to double digit or a 10% rate of return. ABSL, Digital India, they seem to have given a 3-year annualized return of 38%, 5-year annualized return of 32%. This is the whole technology and the tech impact on the day-to-day living of life. Then you have SBI Consumption Opportunity, which has given about 16% annualized returns. I would say ICICI Prudential Banking and Financial Services has done a fairly decent job. That's a good sectoral fund that you can invest in. ESG funds, this is the pick of the day, and for last few years ESG funds have been doing really well. Check out Axis ESG fund, and I think that's likely to do well in the coming time because they definitely has the risks mitigated from the environmental, social and governance point of view.
Absolutely. Thank you so much for this insightful conversation. We've also ended with you giving people a few ideas as to what they can go ahead and research. Thank you so much, Amit, as always, for taking the time.
Thank you, Alex. Have a good day.
You too. All right, we have to slip into a short break, but on the other side, we have Tech Tuesday. It's our conversation every week that we focus on the tech that you might end up buying. Do stay tuned.